Morning, everyone. Happy Friday. It's the end of a short week, and this is your pre-opening comment for Friday, July 9th, and it is video number 843. And I know you're probably bored of hearing it, so why don't you just do it for me and hit that subscribe button. Okay, so Asia down, Europe up a little. COVID concerns much bigger today than they were yesterday. There's talk about Pfizer is asking the FDA for approval for a booster of their vaccine for the variants, Delta variant in particular. So we'll see how that goes. Plenty of information around, but really not that much going on. We had yesterday's big sell-off, and we have a bounce here. Remember, the Dow was down 536 yesterday, and then only closed down a shade over 200. And the opening indication this morning is up 260. So that would pretty much erase all of yesterday's action. Of course, I'd have to see what the market internals looked like along with that, because as my good friend and our futures trader Dennis says, you can manipulate anything, but you can't manipulate the advancing to declining volume. That's just impossible. You can buy stocks, you can jump the markets back to areas that are attractive, but you can't do it without hiding behind that advancing and declining volume. Okay, U.S. senators, that august body, wants to know about the DIDI IPO. Interesting. My question is, even if they had 120% of the information, would they understand it? And my guess is no, they wouldn't. Okay, Levi Strauss this morning closed 28, currently trading 28.88 on upbeat guidance. Pfizer, as I mentioned, looking for an approval. Stripe is filing papers to do an IPO. Square, another payment company, is talking about a physical hardware Bitcoin wallet. So we'll have to see what that actually entails. I guess you could lose that wallet the same way you can lose any other wallet. Stamps.com, a company that I have been so consistently wrong on that I refuse to trade it, because I never understood why anybody would want to be in a partnership with the U.S. Post Office. And that was my idea when I was short it back in the 60s, not the 60s the years, but the 60s the price, is being bought for $330 in cash. The stock is currently trading $327.50. That's up $129.71 or 66%. Included in that is a 40-day go shop piece. And what that means is that the company has 40 days to shop themselves around and see if there's a better offer than $330. And of course, the buyer can turn around and increase its offer. So the stock is trading very close to that $330. I don't know that it makes any sense for them to find somebody else, but you just never know. In any event, up 66% at 327 is quite a chunk. Okay, I'm going to introduce you to the newest meme stock, and that is Carver Bank. And here's a look at Carver Bank. This company is all of a sudden circulating online, Twitter, Wall Street Bets, all over the place. And the main thing that this bank has is a 28% of the float short position. It's a bank. It's a regional bank. and it's a small bank that doesn't pay a dividend. The stock closed at 980 in here, and day before yesterday it went up 8% to 10.5, and then yesterday ran as high as 38.87 and closed. Let's go regular hours. Okay, let's go to the pre-market. Up a little more today, 27.05, up 773, and that's about 40%. And what you have to be able to do is you have to be able to know what to look for here, because you don't know what you don't know. And so the first thing that I look at when I see one of these, I go to the weekly and I look at it and I go back and back and back, and there it is, a 1 for 15 reverse split. And I push it out a little further, and I see that the adjusted high because of that split is 397.50. So while it looks like a great move from last week's close at 1060 to this week's current trading 2701, it's pretty extreme. But basically, it's extreme because they reversed the stock 1 for 15. And I will mention that when I go looking at some of these stocks, those reverses are the first thing that I look for, because when you reverse split a stock, you decrease the amount of shares outstanding, in this case by a factor of 15. So that is always somewhat key. If the company had 15 times more stock outstanding, it'd be a little harder to move than this. Okay, back to the futures. The bonds down a point. The reason that I have a 5-year chart up here is so from a perspective you can see. As a matter of fact, I think I'll go out a little further. You can see that we still have not broken the trend lines. So far, we are actually trading right on that trend line, having gone through it. And that's just not that unusual. But as you can see, we have the high here, the blow-off high in March of last year, and a break, and then a lower high and a break, a consolidation and a break, a newer low at support, and a move to the upside the last 5 weeks. So we are still in the lower high, lower low in the grand scheme of things. And you can compare it to the important bottom in 2014, where you saw highs, pulls back, higher high, pull back to the point to breakout, higher high, consolidation, higher high, and we're seeing exactly the opposite of that. So let's go back to the daily and take a quick look. We had this run from last month, from the 25th of June. That's roughly 12 days of trading. We got excessively high, and by the way, ran directly into the 200-day MA, closed up on the day but well off the high this morning, has never even been unchanged, is come back to the 5-day moving average. I can easily see this back in the 161, 161 and a half area, which for us would be a really nice gain on the TBT. So we'll have to see how that goes. But you see what happens when it gets excessive. I mean, it comes right back down. If it were to do that again to the important breakout, as I said, 161 and a half. The gold is acting particularly well, I think, from the standpoint of continuing to make slightly higher highs and higher lows. We made this bottom. Again, this was Dennis and I talking about the Fibonacci retracement numbers. We got long here. We got out here. We added back in on this little inside day with a higher strike, and we seem to be holding particularly well. 5-day going through the 100 and now approaching the 20. 5 and 20-day cross, generally a reversal in trend. So we'll have to see how this works out. We've taken some nice profits on it, so we'll just have to watch. As far as the rest of the futures, we have the oil, which touched 70.76, pardon me, yesterday and bounced to the upside. We discussed this yesterday morning, and I discussed it last night. The fact that we made a slightly lower high and then reversed back up. We're continuing back up here. It's going to be hard for it to make a higher high and a higher low, but we will see how that shakes out in the next 2 or 3 days. Net gas following the oil pretty much. The grains coming back in a bit after another excessive rally to the upside. Dennis is short the coffee. It's down $2.40, so that's a decent trade. And as I said, the futures are showing up 245 in the Dow, down $8, now down $6 in the NASDAQ, and the S&P up $20. So there you have it. The dollar index is a little bit lower. As I said, the bonds are lower. Bitcoin and Ethereum down just a little. All right, everyone, be careful out there and have a great long weekend. Well, not a long weekend this time, but after a short week, the weekends are still nice. And don't forget to subscribe.